The Steering Committee on Personal Property Tax held a hearing on Wednesday to take testimony on the possible elimination of that tax on businesses. Currently, businesses pay the personal property tax on items like office furniture and machinery. The state collects about $270 million a year from the tax. Scott Drenkard, economist at the Tax Foundation, offered testimony at the hearing, then sat down with the MacIver Institute to discuss the issue further.
Individuals used to pay taxes on their personal property, things that you can touch, things that you can move within their homestead, within their house. And ostensibly, auditors were allowed to come in, and they did, and ask you, when did you purchase this item, and have you depreciated it correctly? Those are gone in all 50 states now, but they still exist in 32 states for businesses.
Drenkard highlighted two states in his testimony, Illinois and Ohio, that ineffectively eliminated the tax because they simply replaced it with a different type of tax. However, he told MacIver two other states were good examples of how to abolish the personal property tax.
In 2014, Indiana enacted local options to allow localities to raise the exemption of their tax, meaning that less of your capital is subject to the tax. It also gave localities the option to exempt new property so that new purchases would not be subject to the personal property tax. And those go in immediately, and they don't have a fiscal impact at all unless localities decide that they want to exercise that autonomy and change their tax and lower that tax burden. I saw that as a common sense, good government move, allowing localities the option to make their code more competitive. And then finally, the best reform I've seen in a while just happened a couple weeks ago in Michigan, where on August 5th, voters by the initiative process approved 69-31 a personal property tax reform that raises the de minimis exemption to $80,000, which is very big. So most small businesses will not be subject to the personal property tax immediately. And then also at the same time exempts new property purchases from being subject to the personal property tax.
Matthew Gardner, executive director of the left-leaning Institute for Taxation and Economic Policy, said the state would have to find a replacement source of revenue if the personal property tax was eliminated, but did say that the tax is burdensome and leads to higher prices for consumers.
Don't business taxes just get passed on to a customer?
Absolutely. They get passed on in some way. The states like Wisconsin generally impose business taxes on corporate profits, on, in many cases, the products the companies buy in the process of making things, and on their real and personal property. And each of these taxes ultimately is paid by an individual.
In the end, this hearing was a first step to eliminating the personal property tax and could lead to legislation once lawmakers are back in session this coming January. For the MacIver Institute, I'm Nick Novak.